Hello, everyone. Welcome to a brand new series I'm calling Market Pulse, where I will be trying to pay attention to the traditional markets and some economics. I don't know if I'm going to be able to maintain this series, mostly because there's just not enough time. But I want to because I have to keep track of the traditional markets. I still trade occasionally, and all that trading goes on only in the traditional markets. And by me not being able to keep up with the markets, it means I am not able to properly trade. So, and that's why I really want to make this series. It'll be a little break away from Bitcoin, and it's gonna try to. I'll try to swing myself into a niche of traditional economics, and also give Bitcoin a little bit of a break. There'll be a lot of screen share. Again, I'll try to do as much work as I can, and there's only so much time in a day, so we'll see. We'll see what this takes away from. Most likely, this would take away from some of the private consulting. I'm going to be a lot more pickier now with private consulting. Like it's just random speaking to people randomly per hour just completely breaks up my day, and it prevents me from doing like consistent work or make presentations or whatever. Okay. And also people seem to have started getting the wrong idea as to what I can and can't do. I don't have a magical formula to tell you when to buy and when to sell, which is what some people seem to expect, which is kind of ridiculous. And I don't want to waste my time, and I don't want to waste anybody else's time. So I'm just going to be pushing people towards my website. I'll be pushing people towards my my trading seminars, which I'll try to do a little bit more of everywhere I travel. And I'm going to try to automate some of that stuff where you would like pay some kind of a fee, and then I send you links to my videos that are private, something like that, right? This way, it just everything becomes a little more efficient. All right, guys, let me go to screen share. Actually, I'm probably going to do it this way. I'm just going to share my whole screen and try not to dox too much. All right. So on my website, I mean, if you're reaching out to me for consulting, and the consulting is about trading, and you have not yet spent some time on my Learn Trading link of my website, please, I don't want to waste your time, and I don't want you to waste my time either. So please review this. I have a lot more links here under time analysis in section 6. So please make sure you click on these. You can even download books for free. I mean, if you're not going to put in the effort, then then why am I wasting my time, right? Even if you're paying me for that time. All right, and of course, my seminar, the Toronto seminar, is more or less sold out. There's a couple of people that are, saying they're gonna come, but unless you actually paid for it, you can lose your seat. So it's pretty much sold out. I mean, if you email me like in a day or two, I can tell you if anyone bailed out. But unless I increase the venue, right? So I'll let you guys know. I'm looking into increasing the venue by 10 people, but it's really last minute. And again, it's like more effort that I don't have time for. So it'll probably stay at the current venue, 20 people maximum. And then I got to start focusing on the Singapore one sometime in January. All right. Let me read this. All right. Well, let's go to the markets. I do want to look at the markets. And I'm back on technicals. And looking at, these are the monthly candles of the S&P 500, and it's been nothing but straight up ever since the election of Donald Trump, which is good. I mean, I was very bullish the stock market since the election of Donald Trump, and now it's getting a little bit too high. Let me throw in my new favorite form of analysis. Oh yeah, and speaking of which, I'm also looking into creating invite-only indices, and this way I don't have to send out my code. I don't have to send out my files. This way I can just put people's usernames and allow them to access this indicator, like paid clients that want access to the indicator, because of course not everybody does. Not every one of my clients is a trader, but the majority are. But here are my current scripts. And again, when we're dealing with all-time highs, I don't really have much else to go by other than this. If we're not at all-time highs, I have other things I can look at. But here's the monthly chart of the S&P 500. And the monthly chart, again, starts to get very interesting. And here's what I want to show. I want to show the difference, right? Because the traditional indicator is a trademarked indicator, and I have not had time to look into the laws of the trademarks, which is why I don't know if I can call it by its real name, or if I call it by its real name and then I say the word trademark, it gets me out of out of hot water. So I have no idea, right? But there's a big difference between the traditional one and mine, in that the color needs to flip for the traditional one to begin. And I don't do that because I don't like doing that. And so here it is. So based on my version, we're starting off a brand new count. So does this mean 9 more months of upside for the S&P 500? Maybe. I mean, did anybody see Amazon stock yesterday? My God, it went up like $30, but it was Black Friday, and everyone shops at Amazon, including myself. And I mean, it just doesn't want to pull back. And if it doesn't want to pull back, you enter back into the stock market. So we had this monthly 9 coming in, and when it doesn't pull back, there's a couple of things that are going on here. This purple line that automatically shows up, blue, purple, whatever. This line, let me get rid of that. This line is basically your very loose, what do you call it? Stop loss if you short it off of the red arrow. Now, normally when I see one of these red arrows, to me, unless other things are lining up, to me, it means to take some profit and get out. So if you realize that it's not going to pull back, your monthly entry point is, no, not there. Your monthly entry point is above last month's high. So last month's high for the S&P 500 was about $2,583 or points. So the moment it crossed that on this current month, it becomes another bullish trade. So on a monthly chart, the S&P 500 remains bullish. And since this is a monthly chart, I want to zoom this out. I know I have a couple of Fibonacci retracements, but yeah, I'm not even sure what else I can do here. I can drop the back test just to clean up the chart. Look, your RSI is grossly overbought. Your MACD is grossly overbought. But that doesn't matter because these things can literally stay up there for months and years. So the S&P looks good. I mean, maybe if I zoom out to a yearly chart, like a 12-month chart, based on yearly, the S&P, oh, wow, I can't even see what number that is. The S&P is on a 6 of 9 year bull run. And look what happened. I mean, these are yearly candles, right? Like, we've had prior 9s in yearly candles, and they've been ignored, and it just went higher. So we're going higher, guys. We're going higher. I mean, I've been saying it for years. I mean, I'm not surprised they don't let me speak at an Acapulco anymore. They don't want me speaking at Acapulco anymore. It's the Anarchist Conference. And every year I stand on stage and I tell them to buy stocks. And every year they laugh at me. And then the following year I come back and I tell them to buy stocks. And they laugh at me again, right? So I've been doing that for 3 years now. and or 3 or 4 years now, and look, we've gone up like almost doubled your money. Gold sure as hell hasn't doubled. So what do you say to that? I don't know. I really don't. Oops, I didn't mean to go to 1 hour from 1 month, but okay. So here's a monthly chart. I'm going to be keeping an eye on it. Probably not every time I do this video, but I haven't done this video in a while. So the monthly chart's bullish. Monthly S&P 500 bullish. All right, let's go to weekly. So, and I think this is the old version. Anyway, I updated my code. I got to figure out how to publish it and how to I need to simplify. Like I spend half my day like talking to random people, like more than half my day, just people messaging me, and that's not very efficient. That needs to stop. I'm just gonna have to ignore more people. I mean, that is just the way it is. I'm sorry, you guys. So we're back to new all-time highs. I thought that this weekly candle could have, kicked off some kind of a reasonable pullback, and it started to. And what helped me identify that was the fact that this candle came immediately after a 9, which was on the same day as a 13. So to me, that was pretty significant. Let me drop this, make it cleaner. But now we're back to new all-time highs. So again, with new all-time highs, I have one reasonable indicator that helps me enter and exit positions. And as long as we're dealing with all-time highs, it'd probably be the only thing I look at. The moment a green candle started trading above the previous green candle, right there, was pretty much telling me to go back into the stock market. So you buy the stock market again, okay? So right there, there's your buy trade. And let's see where it goes. Let's see where it goes, right? If you had shorted off of this 9, well, again, the indicator never even told you to short, right? Because it never even flipped. It even had a price flip, which is crazy. Like they usually have a price flip. And what do I normally say on a day like this? A 1 to 4 day pullback, then probably higher. Now, in this particular case, I was looking for a more sustained correction. Now, obviously, the sustained correction didn't come, so you cut your losses, or hopefully this short trade, if you took the short trade, was still profitable for you. And now you're back in the bullish trade earlier this week. Okay, now I'm going to talk about trading the holiday week. There's a lot of things, there's a lot of little rules and stuff. So anyway, this is the weekly chart. I'm going to save it. I can pretty much delete these lines. I no longer think this is going to happen. At this point, I am very bullish. I guess like this. I don't want to like we're going to pull back a little. Now, I still want to see what happens at this line. I still want to see what happens at 2660, okay? That's my Fibonacci extension, and let's see if that gives us another 9. But right now, I am just back to super bullish the stock market. Here's the daily chart. Again, let me drop these completely. I have new ones. It's been a while since I did traditional markets. So you can look at the pattern here, right? Anytime we get this long stretch of days at a new all-time high, I put this thing saying this will not be the all-time high for a long time, and we are going to go higher. So I constantly draw these boxes, and I constantly draw these arrows. Now, in this particular case, it was difficult for me to draw one of these boxes because we were like slowly going up. And then we had this doji. Saw a doji around here somewhere. Oh, right here. And then, I mean, I had this red arrow here. That turned out to be good. I had this doji here. Now, if this day would have been like a bigger, like a worse day, I would have been way more confident in this being a sustained high. But you did have 2 days to get out at the top, even though it was a doji. And then once this high got broken, it was over, right? So if this is Friday, then Thursday the market was closed, and this was the day before Thanksgiving. And look at that big pop. I mean, it's just people shopping. People shopping. Let's throw the indicators up. All right. And the reason why I drew this arrow is because of this. It was a 13. It was followed by a 9. I had the intersection. You have to read about these things on my blog, guys. And like I said, for clients, I'm uploading educational videos on this, and but they're not going to be public. They're going to be for clients. All right. So, okay. So what do we got here? We have a 13 today, right? So this 13 follows this 13, and this, and that one, right? So, oh man. So it looks like what's happening here is this 13 is coming from this 9, and this 13 is coming from this 9. Because if you go 1, 2, 3, 4, 5, 6, 7, 8, perfect. And then it picks up its own count, right? So today we're approaching a 13. I also have to, like the code is evolving, and I'm double checking the math, and I'm going to make sure that it's accurate over time, probably by year end. Okay, but I'm still using it. This still helps me because look, boom, helped me a lot. Boom, helped me a lot. Not so much here, but that's okay. This helped me a little bit. I mean, these red arrows do not mean, dump everything and go short. They really mean, take your profits and start evaluating these short trades and see how they go. So I see absolutely no topping pattern here as a Friday. We're on a 4. I always expect it to go higher into a 9. Now, it didn't happen here because of the 13 there, so maybe it won't happen. Maybe we'll pull back on Monday, okay? And we probably will pull back on Monday, and here's why. Let me see here. Cyber Monday, here we go. So here are, this is kind of how I want to make this podcast. I want to make it a little more general economics as well. And I know people ask me to talk about things like wheat and natural gas, and I'll probably get to those every now and then. Again, it depends on how much time I have to create charts for them. So historically, the Monday after Black Friday has not been a very good day for the stock market. It averages to a negative 0.33%. Okay, so historically, it has been a pretty bad day. Okay, so you shouldn't be buying stocks, and actually you shouldn't be buying stocks on holiday weekends anyway. When I learned trading, one of the rules that I was taught was never enter or exit positions. Well, actually, mostly enter. You can exit. Never trade the day before and after a holiday. That's why the volume on these days is so small, and a lot of them are half days. Like, shouldn't trade the day before and after a holiday. But here's a little chart that shows you Black Friday at Cyber Monday returns. All right, let's close that. Speaking of the S&P 500, right? I have a little more. Okay, so the S&P 500, according to FT, the S&P 500 volatility is at a historic low. Historic low. The only time the stock market volatility has been lower than it is right now was 50 years ago, basically in the 1960s. Okay, and this is the measure of the VIX. Okay, this came soon after the JFK assassination, and you can see how the volatility spiked on Black Monday. But the volatility is super low, right? So I understand that a lot of people are waiting for that crash. Everyone is waiting for that stock market crash. God, I can't believe I used to read those doom and gloom blogs like 4 or 5 years ago. Like, it's so dumb, so dumb. Thank God a few years ago I got out of that whole thing, and I'm like, well, what am I doing? Why am I listening to these people? I have more experience as a trader than any of them. Why am I reading other bloggers? And ever since then, I started doing trusting my technicals, and I've been bullish the S&P 500 ever since. And I've been right for years, while everyone around me has basically been flat out wrong, with as some of my friends like to call it, doom porn. But yeah, so volatility is at a historic low. Now, does that mean the volatility is going to go up? Yeah, it'll go up, but I still think we have a few more years to go. Let's see what happens with Trump. Let's see where he takes us. And yeah, look, the U.S. is what matters, right? I'm sorry, the rest of the globe, the equities, global equities, don't really matter. It's the U.S. I mean, China is coming up. Maybe in a few years, China will start to get the reins. Let's stick with the stock market, okay? So here's the Russell. Here's the Russell 2000, right? And the Russell 2000 has been a little more volatile now than normal. So, here are the black line on this chart. The black line on this chart is the average returns for the Russell. Let me see here. Do a box. Let's not do it blue. So here's the legend. Oops. Right. So the black line is, I hope you guys can see that on the camera. Maybe I can zoom in one more time. Hold on. Let me do this. Let me do that. That better? That should be better. So the black line is the average returns, the average returns for the Russell, and how it moves from June to June between 1979 and 2017, right? So what is that? That's 37 years, right? So about 37, 38 years, right? So the Russell goes down at the end of the summer, goes back up a little bit in the beginning of September, then it goes down, and then it goes up as of October. So everyone always talks about the crashes of September and October. They're generally right, but October is when the stock market reverses, okay? And you can see how the Russell did not have a very good return early in the year. The Russell did not have a very good return early in the year here, but then it seriously made up for it between mid-August into early September, pulled back a little bit, and now historically, this is where the stock market rallies. The stock market but it's been pretty much on the money, right? We fell into September. We went up in the late August, early September. So we did go up around the correct time. And then we started to go down, well, a little bit late, but, here's a spike. I mean, I think maybe this year contributed to this spike, and now this is the time for the stock market to actually rebound and go to the upside. So let's see. Let's see how, let's see if we can pull that off, okay, for the Russell to kind of stick with it, all right? And this is from Almanac Trader, which is a website. I mean, I don't really read it, but, I get heads up on a lot of these things. I still have, I still get notifications from trading desks. Former life never actually leaves you. All right, let's close this. And finally, another good story from the FT in showing you that even though I'm also very bullish on the tech sector right now, here's the comparison, right? So here's 5 years, 5 years of the tech stocks leading into the dot-com crash compared to the last 5 years of tech stocks. Now, I wonder if I can find that chart. Hold on a second. Another chart. Shoot, give me 1 second, guys. Maybe I can find, I don't even know where it was. I know it was in one of my presentations, but it's kind of old. That shows you how we're overbought on tech. 1 second. Man, shouldn't be looking for like random charts in the middle of live air, but all right, hold on, let me try this. So happy I have multiple monitors. Ah, here it is. So this is what am I looking at here? Oh no, that's net worth. That's not what I was looking at. I thought I had a similar chart of like tech stocks. Like tech stocks has been crazily outperforming. So this is one of the charts that global doomers are pointing to these days. This is a chart of net worth. You can see it down here. It's a chart of net worth versus U.S. nominal GDP, and yeah, it looks a little bubbly, but again, people underestimate how much technology has evolved just in this time span, right? Remember, I mean, yes, the technology evolved very well here with the internet, but this is the age of the smartphone. This is kind of when that came about. Sorry, guys. Not the chart I was looking for, but it looked something like that. But I'm not gonna be able to find it, and it's too late. So tech stocks, the red line is the tech stocks performing the last 5 years, and it's not even close to what a bubble looks like. I mean, here and the blue is the tech stocks during the .com bubble. Okay, so just want to point that out. And oh yeah, so I'm also going to start talking about bonds a little bit and yields. So this is probably also a good time to pull this up because I'm still talking about the stock market. So this is interesting. This is really interesting because the last time the yield curve was this low, it was here. The yield curve spread. Let me be clear. Okay, so what you're looking at is the spread between the 2-year treasuries and the 10-year treasuries. Okay, and here is the last time the yield curve was inverted. And very interesting, if you read this right there, the inverted yield curve has been the prelude to recession in 7 out of 7 occasions in the last 50 years. So for the last 50 years, anytime the yield curve got inverted, okay, which means the spread between the 2-year and the 10-year has gone negative, right? So that means you're getting more interest from a 2-year bond than a 10-year bond, okay? That has led to recessions 7 out of 7 times in the last 50 years. So this is getting really, really interesting. Now, we still have time, right? This is where, this is where we are right now. If I hold the shift key, there you go. That's where we are right now, right? So that's 59 basis points, okay? So if we drop a little bit more, not much more, but we're getting there, right? I mean, we were, less than a year ago, we were here, right? Which was like 140. And now we're below 60. So we're getting there, right? Once we get to this level, then we got a problem. But keep in mind, when did the stocks fall? The stocks didn't start to fall till like second half of 2007. So just keep in mind that there's time. If we are like here, right? That's where we are now. This is early 2015, 2005. So this took 2 years. That took 2 years for stocks to fall. So if stocks continue going up for another 2 years, I mean, who knows how high they can get before the next recession. And if they get high enough, the recession should not bring on new lows, right? Like if the stock market, See, here's what you have to realize about the stock market. I know everyone's waiting for the great crash, everyone's waiting for the great crash, right? See, what you have to realize that the stock market broke out from what almost looks like a double top, right? In the vicinity of 1600. So what that means is that if we go up another 400 points up to 3,000, which is very, very likely over the next, 48 months, over the next 2 years, we can go as high as 4,000. That means that we can crash 50% and stay way above the prior highs, right? Stay way above the prior highs. So what you want is a crash of like 90%, and doesn't happen very often. In fact, the last time that happened was 1929, and I don't know anyone that's alive that saw it. So just keep that in mind. Okay. All right, I think I'm done with the S&P 500. Updated you guys on the yield curve. Oh, Janet Yellen's getting booted. Again, these are the kinds of things that I'm supposed to keep track of, and I'm gonna prioritize traditional markets a little bit more than I have been. Bitcoin will be fine if I take a step break and work on my backup plan. All right. Okay. Next. Okay, so we're done with the markets. Let's go to gold. Okay, so here's gold. Here's monthly gold. Okay. So the monthly gold is a bit in no man's land, right? Because, oh man, that was obviously a bubble. Hindsight, 2020 always. And I'm not really sure what I can do here. I guess I can throw some Fibonacci's on. I'm trying to look at this objectively before I throw on the time indicator. So let's take a look at Fibonacci's. Oh man, messed that up. Okay. I'll grab that. We'll go here. Okay, this is a monthly chart, so I don't feel bad about using the wicks of the monthly chart. So your Fibonacci extension brings us to almost 2,500, but we have to break all of these, right? Oh wow, how ironic! You throw this Fibonacci on a year and a half ago, and boom, you have a perfect point to identify how far your rebound will go. That's interesting, really. I didn't know that was going to happen. So this is exactly how Fibonacci's work. You identify the top, you identify the bottom after it rebounds, and then you have a projection of where it's going to get rejected. And that's exactly where it got rejected. So let's see if we can get over this Fibonacci. Now, my rule on double tops is simple. If we get back to this line, yeah, it's pretty good. It's pretty neat. We get back to this line, it's going to get broken. So I will not be a full-blown bull of gold until after we break, like, what, 1375 area. I mean, that's the monthly chart, right, on the futures. This is the COMEX gold future ticker GC1. Your MACD and RSI look positive. I mean, they're better. Your MACD and RSI look good. I mean, I connected the tops, not the wicks, but the wick is lower as well. And maybe if it falls into this 50-month moving average, we can see a decent rebound. So let's see. So there's nothing else I can do here other than my time indicator. Let's see what we got. I'll even zoom out a bit. Let me drop the back test. Oh, that's convenient, right? Very convenient. Sure, Wall Street saw that. This one too. Hey, they don't always lead to full-blown corrections, but this one didn't work out all that much. But you know, there was plenty of, but you knew it was going to happen. You knew it was coming. Um, and this one worked out pretty well. And these are monthly candles. I'm really curious how close this came to being a 9. For that, I need to turn on the back test to see what number it had. It had an 8. Wow. Off by 1 month. Off by 1 month. Also a 12. Off by 1 month. Man, just missed it. Just missed it. I guess trading started a bit premature. Just 1 month off. Would have been a perfect bottom right here. But only would have fallen a little bit. The 1 more month would have been a perfect 913 on the same month. Would have been beautiful. Still could have been timed in hindsight, of course. So we're bullish here, but next month the price is going to flip because next month we'd have to close above, 1325, and I just don't see it. All right. Yeah, so that's your monthly chart. Let's save that and move on. Here's the weekly chart. Same thing. I can zoom out. I can drop this thing. I guess it was a trade from last time I did this video a long time ago. And yeah, I mean, the short trade was working for a bit. You set a break-even stop. You walk away without losing any money. To me, the number one rule is don't lose any principal. Like, you take on safe trades. So I'm going to drop this. No longer need it. I was looking for a pullback back to the breakout trend line, or at least the 50-day moving average, or at least the Fibonacci line, but it reversed a little bit early, probably because the dollar dropped. I mean, a lot of geopolitical stuff going on. Let's throw in the new indicators. Drop the back test. Clean it up. You had a 9. It was going. I mean, yeah, this was on a 7 candle. I was looking for 2 more candles to the downside, hit the moving average. Probably that is what I meant. And we're in no man's land. This is one of my no trade zones. I mean, if you want to trade only this indicator, you wait for, I guess, Monday to start trading above Friday, and then you can enter the long trade. For me, this is a no trade zone until we break the following line. Like, if we can break this line, I become bullish. If we break this line, I become bearish. Like, to me, this is a no trade zone. Between 1270 and 1305 is a no trade zone. Well, 1300 round number or whatever, right? Because if we get into this area here above 1310, we're approaching double top territory, in which case I become bullish and wait for these resistance points up there. All right. That's all I'm going to say, really. Not really much else to say on the momentum indicators. If you look at the MACD and RSI, oh, wow. Here's the weekly chart. Again, it doesn't always work, but it always helps when your very critical highs show up with red arrows by running a code script. Okay. Anyway, I was going to this. I mean, they're downwards. I mean, they're trending down. I mean, this actually makes more sense now if I do it this way. Come on. These two lines are starting to be a little more parallel now. You know, not like that, like that. A little more parallel. So, trending down. RSI, sorry, MACD trading down. Not good. Not good. All right, next, daily. I mean, I keep looking for this cup and handle, and it's just, it's just being resilient. But again, the dollar had a lot to do with it. It's neutral. It's in a no trade zone. I don't know. Wouldn't touch gold right now. Wouldn't touch it. If there's a trade, I'll tell you, but I wouldn't touch gold right now. Other assets to trade. Oil. What is this? Daily oil. Let's look at weekly oil. Let's start from the highest time frame and work down. So oil continues to go up. Here's monthly oil. So this is weekly oil. Do I want to glance at, maybe I'll glance at monthly oil after, right? So clearly I was bullish on oil with this green zone. Target has been met. Wow. I mean, if you're in a trade like this and you don't see any reversal candles, there's no reason for you to exit this trade, right? You just stay with the trade. Here's another resistance point coming up on the Fibonacci around $60. Let's see what happens. Let's see what happens. That's your Fibonacci. Where's it coming from? I guess from here. Yeah, so just like gold, let's see, because it's gotten rejected here before. Hindsight, because you couldn't draw this Fibonacci yet. If it gets rejected here, let's see how low it can go. I mean, if the 50-day crosses the 200-day, it's going higher. So let's see. I mean, I never thought oil can make it back to $100, but I'm, happy to be wrong if I can trade it right. So I used to trade oil futures. I just don't have time for it much anymore. All right, so it's bullish. Let's throw the indicator up. Right, so that's your resistance right here, the Fibonacci, right there. And I'd have to go to monthly to take it further back in time, right? So I should probably have a standalone monthly chart. Right, so there's a Fibonacci here. I don't really feel comfortable expanding the Fibonacci to there. If anything, there should be its own Fibonacci from up here. God, I remember this. I was working at Bear Stearns then. Well, JP Morgan actually. Yeah, I was already at JP Morgan throughout this entire fall in oil. That was wicked. So here is the higher level Fibonacci, and that line comes in at $76, right? So I'm gonna delete it, but just something for you to keep in mind at home. Yeah, so here's the monthly chart. Head and Shoulders still there. I mean, it's being realized way later than it was supposed to. And yeah, I mean, let me see how many more potential months of upside we can get. Wow, that's convenient. Man. Oh, man. Jeez. All right, but it's my first time pulling up this indicator on, I'm not like tricking anyone. It's, I just pulled this thing up. I mean, I don't think I've ever looked at oil monthly. In the year and a half I've been doing these videos on my channel. And I've only started showing you this indicator like in July. So I certainly have never looked at it. Oh man, it came up just short here. Yeah, it wouldn't have helped you at the bottom. But that was sweet right there. Right there. I'll call the bottom here nicely. These are monthly candles. And right there, there's a 9. Came right after the doji candle, got the intersection going, everything. Beautiful. Very nice. And according to this indicator, your monthly entry was last month, the moment you started trading higher than the prior month. Wow. I need to save this as a standalone, but I have the weekly one saved. Let's go to the weekly. Okay, so just like in the stock market, right? So this 9, if you were in a bullish trade, this is where you exit, and you go down. And if the trade doesn't work out off of this red 9, where do you get back into the market? That's the question. When do you get back? Well, you can get back as early as this line here. You You can get back as early as that. Oh, man. You can get back as early as the first green number starts trading above the prior green number. Okay. Now, there was no price flip here, so there's a... Anyway, I'm going to have another indicator that's closer to what Wall Street sees. There's a prerequisite that I don't like from my experience. So there you go. Bullish. I mean, bullish, right? No reversal candles, no nothing. Bullish as of, didn't pull back. 1 to 4 day correction, then higher, reevaluate. That was the weekly. Here's the daily. What are my metrics here, right? So can we get a pullback? Sure. RSI is back in overbought. MACD is positive. Again, there's nothing really I can do here other than throw on the indicator. Oh yeah, I haven't looked at this one at all. Hold on, I have to adjust some things. Background indicator values gone. Okay, here we go. So let's see what we have. We had a 9. Again, you can take some profit. And this 9 kicked off a 13 count along the bottom, which is sitting at a 9. So guess what's going to happen soon? 6 is a 10. 7 is an 11. 8 is going to be a 12, hopefully. And 9 can be a 13 if it continues to go up for 4 more days. So, I mean, you stay with the trend. Based on daily oil charts, your entry was here. The moment this 2 started, sorry, nope, I messed that up. Here. The moment this 2 started trading above that 1, that was your entry. That was your, oops. That was your bullish entry right there, okay? Now, you can also say, well, Tone, wasn't there a bearish entry right here? Wow, that 2 didn't trade at all. Wasn't there a bearish entry, well, a little lower than that? Wasn't there a bearish entry right there? And I'm going to say, yes, there was. That was a bearish entry. It was a decent bearish trade. In oil, this would have fallen from 56.7 all the way down to below $54. Oil trades at 50 to 1 leverage in the futures market. That means for every 51 leverage on 1,000 barrels. So per contract. So if you traded 1 contract and oil had fallen $2, okay? I'm sorry, it's 51 leverage, 1,000 contracts. $1 move in oil is $1,000 in your portfolio, right? So for every contract that you traded, a $2 move in oil will make you $2,000 for every contract traded. And to trade a contract, all you need is $5,000, okay, to trade 1 contract in escrow, okay? So that's kind of how it, not escrow, but in market. Yeah, I call it escrow. Anyway, so there you go. So bullish. Oil's bullish. The euro. Let's look at the euro. I'm probably going to go through these markets faster next time. I just haven't looked at them in a while. I'm trying to get myself familiarized with the charts. I mean, I was expecting this to go down further. The short trade is still in the money, but hey, you got to set your stop losses correctly. I haven't looked at the euro in months, so I wasn't going to be able to update you. So obviously this trade needs to go away. Would have gone away a while back. So let's see here. Let's zoom out. Weekly euro. It looks good, actually. It looks good. I mean, your MACD is still bearish, but reversing. See, any trader will tell you that this needed to go lower, right? Like all the metrics were calling for a much more serious correction. All the metrics were setting up for a big down move, and it didn't happen. So let's see if it gives us a double top. If it gives us a double top, I'm going to say it needs to go higher. So How high can it go? Well, a couple of things. Again, you know what? Let me go to monthly. I haven't looked at monthly in ages. All right, so looking at monthly, I guess I can throw the high level Fibonacci's. Where am I here? So based on Fibonacci, I mean, that's where we can go. This is the monthly chart. Not much else I can do here, other than put the indicator up on a monthly chart. Oh, wow, there it is. There's a 9. There's a 9. Not perfected, but still a 9. I'd be a little careful with the euro here. I would be a little careful. I wouldn't rush into any bullish trades. I would wait. I would wait for a green number to trade above the green number on a monthly level. So for the rest of the year, I would be a little cautious about going long the euro. All right. Weekly. Weekly chart's bullish, but it goes against your monthly chart. So you got to be careful, right? I fully expected this 9 to evolve into something. It didn't. A couple of more weeks, it started to go down. Thought it would go down further. It didn't. I was hoping for at least to see a 9 here. Only made it to a 7. And weekly chart's bullish, but hey, like the early turn in Bitcoin, I missed that one, and I'm probably gonna miss this one, right? Like I'll wait. I'll enter the breakout. I'll make my money on the breakout. I'm not gonna risk it here because if you go in and you're wrong, you're gonna be immediately wrong. So I wouldn't risk it. So this is actually playing out just like Bitcoin did when it didn't fall as low as I expected. Same thing with the euro. Very similar. Reminds me of that. And finally, on the daily, same thing. Like this trade no longer is relevant. This looked good. I mean, look at these arrows that I drew in real time, right? I'm pretty sure I drew these arrows at this point or somewhere around here, right? At least I think I did. And yeah, because I expected it to go into the 50-day and then down. I expected it to go over to 200, but it reversed a little bit early. So again, throwing the indicator up. What do we got? Well, the 9 call was decent. Not perfect, but decent. Bullish. So you're bullish daily and weekly, but you're bearish monthly. So do with that information what you like. All right, I gotta save these charts so that I don't lose all this stuff. All right, this is probably a lot longer of an explanation than I wanted. I think I've gone almost an hour. I think I have one more, and that's the US dollar. I don't like looking at the dollar index because the dollar index is like 60% euro and another 15% Japanese yen. So like 85% of this is dollar versus euro and yen. So I'd rather look at the dollar versus the euro and the dollar versus the yen. People have been talking about GBP, I think, GBP USD. Let me open that up. GBP USD. You can see the last time I looked at the GBP USD chart, it was March 2nd for the weekly and January 8th for the daily. My God. And January 2nd for the monthly, right? So, I mean, we can pull them up. We can go, daily, weekly, monthly. Just shows you how, I mean, I don't have time to look at these things all the time. So here's the monthly. Yeah, again, it has like the very first use of my code. Let's drop that. What is this dashed line? I don't even know what it is. Oh, there it is. Yeah, so that's going to be a monster point of resistance, guys. This is the monthly British pound versus the US dollar, the 1.4 line. It looks like it wants to go back there, but that's probably it. Yeah, there's not much else. Let's throw the latest version of the indicator. Oops, let's update it. Man, just missed it again. Ah, right there, right? Just missed it. Just missed it. It was a 9 when the it probably was a 9 at one point, right? 1, 2, 3, 4. Oh no, it was never a 9. It was never the 9 was always in jeopardy. Once this 8 bounced back, the 9 was going to be in jeopardy. I mean, it's neutral right now. No long, no long trade, no short trade. You're waiting for a green number to be above the prior green number on the multi chart. Here's the weekly. Again, I haven't looked at this in ages. Looks good. You know, you broke out above the moving average, but I've been bullish. I mean, I've been bullish on the British pound in the past. I think it's grossly undervalued, but once it gets to 1.4, it's going to be a problem. So once it meets this 200-week moving average. So wait, what am I doing here? I don't want that. What was I doing? Oh, I was going this. Yeah, I don't need that. Again, wow, like old. Haven't looked at these charts in ages. Anything useful? Well, here's that double top situation. That wasn't going to hold. So now we broke out. Yeah, so weekly is bullish as of earlier this week. Breaking this one. 2 breaking the 1, right? You want also bullish here, and then your trade, you know, take some profit. All right, good. And finally, I'll take a look at the pound versus the euro next time. That's the very old script. Might as well pull up the new script. Oh, watch out on a daily. It's telling you to be careful. You know, the daily, got to be careful here. You know, the last time you had one of these 9s with a red arrow was all the way up here. And now you got it again, you know, with the intersection. So, all right, so that's pretty much it. I'll take a look at the. I'll be taking a look at the euro versus the pound maybe in future videos, but I think that's it, guys. Any questions? Trying not to do Bitcoin today. I haven't looked at the price of Bitcoin. I have no idea what it is. I mean, do I dare? Do I dare look at it? Let's see. I'm looking at the live chat now. I don't have anybody helping me with questions. All right, I'll open Bitcoin. Maybe I won't talk about it. I'll just open it. Where is it? I talked about it this morning with Jimmy. You know, week flips over next week. Let's see what happens. Wow, nice day. Nice day. Really unfortunate that this is coming on, you know, price flip and not on candle 2. A little unfortunate, but the all-time highs, I mean, there were other reasons to get in besides this indicator. There's the 4-hour. No, it's not. That was from a client earlier today where we looked at this thing. What the hell is this thing? Oh, this is the OMG scam. Excellent. Yeah, so we were looking at this. So this is the indicator. I really thought I closed it. I had no intention of showing this to the public. But since it's open to the public at this point, Here are the last 9s that showed up. This is the 30-minute chart. Here, 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 and here. And you can tell by the arrows what they are suggesting, right? You can try a different time scale. You know, I don't have this chart saved in multiple time frames. I can guarantee you that. Not really useful in the 1 hour. Kind of useful in the 4 hour, right? Like there's a 9 here, and there's a 9 there. And daily before I close this damn thing permanently. Nope, not very useful. All right, well, it's not useful all the time. All right, let me close this nonsense. I guess I have to save it. And what is this? This is the 4 hour. So the 4 hour is good. I mean, 5 is a nice flat candle, which is good. Let's look for 4 more candles of upside all the way into tomorrow. And then tomorrow, maybe a little bit of a pullback. This is what I drew this morning. And yeah, this, I mean, it's an ascending triangle, right? I mean, almost, or getting there. You know? It's not great, but I mean, maybe it's a stretch, but anyway, looks good. Looks good, guys. All right, maybe I'll take a question or two. I see a question. So the best way for me to recognize questions is to tip because they go to the top of the screen, or to write the word question or ping me with my name, something that I can recognize. Can you overlay USD JPY on gold chart to show how closely correlated they are? I guess. Let me see. Do I have a JPY chart? I don't. All right. So all right. So what should I do? But correlated on what time scale, right? All right. Let me go back to the other page, actually. What is this? That's the British pound. Okay, cool. All right. So let's do save as. I need a JPY chart anyway. So here's the thing, right? Do you want USD JPY or JPY USD? Because the thing is, oh yeah, it's usually USD JPY. USD in JPY terms, right? So that's the one that gives you 100. Okay. So I'll make this a daily chart. Save that. I'll change the ticker. All right. I don't know which one's more liquid. I already forgot. I don't trade currencies, guys. I don't know which is optimal here. Is it this one? I hope so. Came up first. All right. So here's US dollar versus the Japanese yen. All right, well, I don't need all of this stuff. Let's start there. So you want to compare that against gold. All right, let's take a look. Doesn't look all that correlated to me, but hey, to each their own. All right, so looks pretty inversely correlated, unless I flip it, right? Unless I flip the other one, unless I'm looking at instead of USD JPY, JPY USD. It's a little bit better. Yeah, but they're all gonna be, right? Like that's the thing, right? Like gold is like another currency that trades against the dollar. So if the dollar is falling, gold's gonna be rising at least a little. So this makes sense. Still doesn't look. I mean, but the euro is gonna look the same way, right? Well, actually, not the euro, really. Like I'm trying to think what other currency, like maybe the Australian dollar or something, like the Aussie dollar. Um, right? Because not like the yen. Yeah, so the yen is probably more correlated. Yeah, yeah, it looks pretty correlated. Right, but you can't predict it, right? Like you can't predict it. Like the same reason why Japanese yen's going up against the dollar is the same reason why gold is, right? So it's it doesn't really help you at all. Um, Now, oh, the one thing I haven't looked at in a while was my ratio. So that's the gold silver ratio. So I think I was using this one, though I did have a longer one. Um, or was it this one? Let me try this one. Let me see how I haven't looked at this in like 6 months. Yeah, so this is interesting, right? So um, I treat this line as short gold and buy silver, and hasn't really gone all the way down yet. So we'll see. All right, let me see if I can get to like another question or two. Am I going to do a seminar in Los Angeles in the future? I just did a seminar in Los Angeles. The seminar before this one was in Los Angeles, guys. I don't think about BCH to answer that question. Is there a way to chart BTC versus ALT index? I don't know what the ALT index is, guys. Sorry, I don't know everything. How's my diet and exercise going? They're not. Obviously. That's a silly question. What do I think of BCH? I don't. It's a scam coin. It's a centralized scam coin. I don't like thinking about it. Is B Gold a scam? Sure, but not as much as B Trash, right? See, the problem with B Trash is it competes with Bitcoin for mining. At least Bitcoin, at least B Gold only competes for electricity and hardware investment. It doesn't actually compete for mining share. Well, on a higher level, it does. Is it only safe to just trade government-manipulated stocks in the S&P 500 and leave everything else alone? Well, it depends on your definition of safe, right? Like, for example, the government is not going to steal. I don't have a like the probability. I mean, contrary to gloom and doomers, the probability of me losing my Apple stocks in my retirement fund is infinitely small compared to the probability of me losing my Bitcoin in an exchange, let's say Bitfinex, right? let me stop using Bitfinex as a punching bag. The probability of me losing Bitcoin in Bittrex or Poloniex or BTCE or Mt. Gox, or Cryptsy, the probability of me losing my Bitcoin there is infinitely greater than the probability of me losing my Apple shares in my retirement account. So yeah, it's a lot safer to trade. For me, it is, right? Others may disagree. Let's see what else I got. Bitcoin price versus gold. Why? Why? It's you keep just it doesn't make sense. It doesn't make sense to analyze Bitcoin against gold because they're both traded against the dollar. Doesn't really make sense to me. And I'm tired. I don't want to do it now. All right. Someone is asking the following question: what is wrong with BCH, and why do you call it a scam coin? So you're obviously new. You probably just showed up watching my videos for the first time. There's about 40 hours of video on this topic. I recommend you going back and watching. I'm not going to be explaining that here. It would be for me to explain why Bcash, why BCH is a scam, would be patronizing thousands of followers that have been with me for a long time. Are the stocks really okay? This is a good question. Is the stock rally fueled by historically cheap interest rates and therefore unsustainable? No, absolutely not. The stock rally is not fueled by cheap interest rates. Stocks don't really care about interest rates, okay? Because, I mean, they kind of cared in 1980 when interest rates were 18%, right? But we're not talking 18%. Just think about it, right? The interest rate has been low, I agree. But even if you raise the interest rate right now to 5 or 10%, who the hell is going to, I mean, look, let's put it this way, right? It's like saying that the rally in Bitcoin is because of low interest rates, right? No, it's because it's a better investment. It's just a better investment. If you raise interest rates to the point on bonds, if you raise interest rates to the point on bonds, where you think you'll make more money from bonds than from stocks, people are going to buy bonds. But think about it, right? Like, it's just buying government bonds is such a silly investment, right? Do you really think that like Amazon, Apple, Google, Facebook? I know a lot of libertarians can't stand Facebook and Google. They think they're the worst companies that ever existed. But do you really think that government bonds are a better investment than a company like Google or Facebook? God, no. So no, stocks are expensive because everyone's expecting technology to give us self-driving cars tomorrow, and it's dragging its ass. All right, next. Price of Bitcoin versus altcoins. I can't graph that. Sorry. If somebody wants to give me a chart of Bitcoin versus altcoins, or in altcoins, that'd be great. But you can look at it on. I know there's better websites, but I can't remember off the top of my head. If you go back to CoinMarketCap, right? I mean, if you want to see a chart of Bitcoin versus all of the altcoins, all you got to do is click on this thing right here. Come on, come on, come on. Today. There it is. Right there, 51%, right? There's your Bitcoin versus the altcoins, right? Here it is for the year. So there you go, right? There's your Bitcoin versus altcoins. Notice how they all come and go. What's this blue one? Oh, Ripple. Okay. What's this purple one? Ethereum. What's this green one? Btrash, right? Like they all rise and fall. They all rise and fall, and they're gonna fall hard. Okay, Btrash is not sustainable. It can't. There's no competency in development. Man. All right, let me see here. What makes a good test for Bitcoin versus S&P correlation? I don't know. I don't know. What will happen to the volatility of Bitcoin when a CME future start trading? I don't expect much. Will the price fluctuations be determined by trading of Bitcoin? Yes. Yes. I don't think the trading of the CME futures is going to determine the price of Bitcoin. I know I'm like on an island there. I've been arguing for it though. All right, guys. I think I'm going to call it a day for this. I don't know it's Saturday. I know I got a ton of work to do. If I have time, I'll do a Bitcoin show. Maybe I'll just do it tomorrow. Maybe I'll do my Bitcoin price analysis tomorrow, and I don't think I'll do another one of these next week because I'm going to be busy. But I need to start doing more traditional market analysis, and I will focus on traditional market questions. I'm not sure how I got into this whole Bitcoin thing, but anyway, I'm going to call it a day. Let me turn on my camera. I'll say goodbye to you guys. There's like some college football on in the background that I haven't had time to watch. I believe Florida State beat Florida for the 5th year in a row. That's beautiful. Sorry, Gator fans. I know I have one. It's 5 in a row. But I want to catch the Alabama game. That one's big. And after that, it's off to Columbia. Oh, no, forgot one thing. Hold on. Shoot. My travel schedule. Like my website doesn't even have my travel schedule anymore. It's terrible. Do I have it up here? No, I don't have it here. Is it here? Yeah. Hey, the blockchain cruise after Columbia, right? So I'll be at La BitConf. Oh, and then I'll be in Toronto, and then I have my own seminar. Well, anyway, Singapore. The reason why there's going to be a Singapore trading seminar, this one. The reason why there's going to be a Singapore trading seminar is because I am speaking on the blockchain cruise along with our dear friend from the crazy world, John McAfee. Wow, I'm totally going to get myself thrown off the boat. So there you go. There's another speaker for you to enjoy. But yeah, I will be. Oh, I know some of these people. So I will be speaking on the blockchain cruise from Singapore to Penang, to Phuket, and then back to Singapore. So I don't know when I'm going to do my trading seminar in Singapore. It will either be right before I get on the cruise, after I get off the cruise, or potentially I'll be back in Singapore in January as well. I may go to Bali. I may go back to Thailand. I haven't fully planned out this trip yet because I'm still trying to figure out my Colombia trip. That's going to happen in a week. But yeah, so keep an eye out for me in Southeast Asia between January and early February. All right, guys. I'm going to end it here. And please learn trading. Learn trading. Okay. I don't want to be an oracle. Learn trading, guys. Talk to you all on the next one.